Thank you for this opportunity to enlighten you on something that's very close to my heart, which is chrome and ferrochrome smelting. We're very fortunate this morning to have Dr. Nils Backeberg here, as he's the manager of Steel Alloys Division at Ruske and the lead analyst for chromium, antimony, and rare earth research. Before joining Ruske in 2017, he worked as an exploration geologist on rare earth deposits in South Africa, gold deposits in Canada, and geothermal projects in Guatemala. He completed his PhD at the McGill University in structural geology, and after his PhD worked on rock mechanics of shale gas exploitation technologies at the University College London. He's published several peer-reviewed papers and articles and received his Chartered Scientist accreditation in 2019. His home is in Cape Town, where he completed his MSc in geochemistry at the University of Cape Town. So I'm looking forward to this presentation today. So Nils, you're welcome to start your presentation, and we're all eagerly waiting to hear your views on the chromium future of chromium market in South Africa and how it's going to evolve.
Thank you, Isabel. Good morning, everyone. Coming to you live from the southern tip of Africa, where a Cape storm has just come through. So thank you for that introduction, Isabel, and thank you to the South African Institute of Mining and Metallurgy for hosting me here this morning. I'm going to get going with sharing my screen quickly. Can you confirm that you can see that? Please, Isabel.
Fine, we're perfect. Thank you very much.
Excellent. So, again, thank you for hosting me today. Today I'm going to go through the research that we've been focusing on the last couple of months, trying to understand what the 2020s are going to hold for the chromium industry. So I'll be talking about chromium and ferrochrome, and seeing that we are back here in South Africa, focusing a little bit on South Africa's role, South Africa really being an integral part of the chromium industry. To start quickly, just give a quick background on Ruske. How do I click to the next slide? This usually works. There we go. So Ruske, we're a research information company with a global footprint. I've managed now to add Africa onto our map by sitting in Agulhas. But specifically, we have really grown our office spaces in China. When we're talking about, pick a commodity, China is part of that conversation. So we've grown our offices in China significantly over the last couple of years to really try and understand the nuances of the different commodities and markets that happen in China. We cover about 40 different metals at Ruske, from steel alloys to electric vehicle materials, industrial minerals and technology metals, going across the supply chain, so from project analysis all the way through to end-use applications and detailing sort of cost analysis in there. Just quickly to show, or just to say, we produce we produce annual reports on a variety of these commodities. And so for the chromium reports, I'm busy working on getting all the forecasts together at the moment to see how the industry could develop, and publishing this report in June. And these reports typically come sort of 3-month updates where we see what's happened in the last 3 months and how this has impacted the short to medium term forecast. We also have a consulting branch where we do sort of bespoke research based on commodities, so for specific companies, from strategic consulting to supply chain analysis, etc. And more recently, a lot of focus has been on social economic assessments for commodities. We've done a detailed group study on chromium, the ICA last year, which they've published various aspects of that at their conferences, as well as sustainability of commodities. These are all quite key conversations when we're talking about sort of the longer term sustainability of these industries, and becomes quite interesting. So enough showing off of Ruske, and let's talk more about chromium. A quick disclaimer, there are some forward-looking statements that I'll be talking a little bit about. Please make your own decisions with regards to these, but I hope you like what I say or are interested in it. So I'm going to talk about chromium industry. So I like to show this graph that you can see here, which pretty much summarizes the entire industry in one image. So what we're seeing here on the left is sort of a flow chart from ores all the way across to end of life. So in blues are different types of grades of chromite that come out of the ground. And in green, we have our intermediate products, ferrochrome being the main sort of intermediate product used for chromium. And then you also see scrap coming in here as a significant part of the chromium supply chain. So end-of-life stainless steel applications come back through the recycling loop. And this is quite an important market for this industry because it does add a significant volume of supply, talking about 34% for the stainless steel industry and that sort of level. I've mentioned stainless steel several times now. So the main application for chromium is stainless steel. So without chromium, this industry does not exist. And based on these images here, you can see that most of the ferrochrome goes into stainless steel, and it's really the market dynamics of stainless steel that define the chromium industry. There are a variety of other applications in terms of chemical grade ores going into the chemicals industry, foundry grade sands, foundries, and refractories as well. And they're used in a variety of first use applications here. We do focus a little bit on understanding the dynamic application, because this is really what drives the longer term forecasts, is understanding what these industries are doing with regards to the sort of 10-year plus forecast. And that way we try to understand what is required from the supply side in order to meet these demand levels. And that's really how we approach the research from both sides, going a detailed supply analysis, detailed demand analysis. In the forecast, we try to really merge those together and see what are those dynamics. Starting on the left of that flow chart, looking at chromite grades. So just to quick little bit of introduction, I'm pretty sure many of you in here will know much more about this than myself. So I look forward to getting some corrections along the way as well. So we're talking about metallurgical grade markets versus specialty grade. As I said, ferrochrome is really the main application for chromites. And the graph here on the bottom left, in blue and green, those are both ferrochromes, high carbon and medium and low carbon ferrochromes used in the steel industry. And you can see based on those bar graphs, it really accounts for the majority of demand for chromites. And so it is the dynamics, the supply and demand dynamic or demand dynamics of the steel industry that really underpins the future of chromium. The specialty grade chromite market is interesting in its own right, but is a much smaller volume. And so the graph on the bottom right sort of just zooms in a little bit there. And you can see over the last decade, actually, that market has shrunk somewhat. This partly reflects reusability of material used in the foundries and refractories industry and the chemicals industry, and also being exposed to chromium hexavalent or hexavalent chromium. So it has some environmental issues that are taken or that are followed quite closely in these industries. But I'd like to just talk a couple of minutes about this a bit further, because the specialty grade chromite industry does have a close link to the metallurgical grade industry. The graph at the top, so these line graphs above, this is just the relative prices of the different chromite grades. So in black, we've got metallurgical grade prices. In blue, chemical, orange, foundry, and green refractory. So back from 2010 across. So this scale at the bottom links in with the top here. So ignoring the details of the past, these markets are really governed by long-term costs of the metallurgical grade markets. And the specialty grade ores do follow the similar pattern because they have that same underlying structure. And the availability of specialty grade ores really is determined by the met grade market, because it is such a much larger volume market. But what is quite interesting that happened in the last 2 years, what I want to focus on here, 2018 and 2019. So what the graph at the bottom right is showing you in dark blue is chemical grade produced ores, and in the light blue is metallurgical grade ores that were traded as met grade ores that were then further processed into chemical grade ores. And so you can see there's quite a significant volume of further processing, so further washing of met grade ores to get your chem grades. This happens quite a lot in China, where they've got their wash plants set up, and it's quite flexible in terms of what the prices are. So there's quite a neat relationship here between the prices of the different concentrates. So in 2018, you can see here that there was theoretically no requirement for further washing of met grade. It doesn't mean to say that there was no washing plants operating, that's not the case. But there was enough chemical grade produced from primary or specifically for the chemical grade industry. And the reason for this is, if we look at the prices here in 2017, we had this nice price spike, which is really still determining the market dynamics for chromium at this point, and caused a surge in supply for met grade ores. As a result, the specialty grades followed that in terms of its prices. But towards the sort of mid-2018s, we saw met grade ores really starting to suppress, and this is really what has defined the last 18 months of the chromium market. And so you saw suppliers try to gain extra margins from the higher prices of chem grade ores over 2018, so getting access to that. That market quickly went into surplus and pushed down the prices, and now it's happened in 2019. We saw the same story in the foundry grades industry. And there's actually been a surplus of foundry grade supply. So if we would forecast this to 2020 now, we actually are expecting foundry grade ore supply to decline in terms of, or at least its requirement, because there's a significant amount of surplus in the market for this year. So just quickly summarizing that, the specialty grade markets, they're a niche application. They account for about less than 5% of the total market, where 95% of chromium really is about steel. But there are sort of interesting nuances of these industries that are linked to the market dynamics of the steel industry. All right, for the rest of the talk, I'm really going to focus on the primary application, so really stainless steel and the market dynamics around that. So to start on the major trade flows here, this is another map showing chromite trade flow. Just to start a little bit with the fundamentals of the markets, is we've got South African grade, or the global resources here in the top right, showing you South Africa and Zimbabwe really accounting for nearly 75% of global chromium resources. In terms of production, on the bottom left, you've got chromite supply. South Africa is actually representative of its geological heritage in terms of supply of chromium. So it is doing what its dues are done based on geology. And so what the map here is showing you in the shaded colors, this is chromite production. The darker the colors, the higher the production. And it really is based around South Africa. And then you've got Kazakhstan and India sort of next in line. And you can look at this at your own time. And then really this feeds into the ferrochrome industry. And it's those industrial images that I've put in here. These are ferrochrome producers. Again, the size illustrating the scale. So just to quickly summarize, or to try and use this map to summarize the chromium industry in sort of one go, the active chromium hotspots are really South Africa in terms of its ore and ferrochrome, China in terms of ferrochrome, stainless steel and niche applications. So China doesn't have much ore to speak of. There is a mine there. And then Kazakhstan and India next in line, both doing ores and ferrochromes and chemicals, but really more of an integrated system. Or industry, excuse me, except for importing, specifically India is importing chemical grade ores from South Africa. Turkey and Finland, both with ore and ferrochrome. Finland doing stainless steel. Turkey, again, much like India, importing chemical grade ores from South Africa for its chemicals industry. Russia on niche, USA, chemicals. And then I've added in here at the bottom, sort of fading out. Indonesia, I think, is a growing important market that we need to be aware of. They, in 2017, commissioned a new stainless steel plant, and that is starting to see some sort of reaction in the trade flows. The Middle East has been interesting. There's been growing ore supply coming out of Oman and the UAE, and really one of the latest places outside of China where there's been much any investment in the ferrochrome industry. Then I've put Zimbabwe right at the bottom in sort of a faded red, really emphasizing its sort of relation to the resources that we see. It has a significant amount of chromium resources, but really not representative on the global markets. There are various aspects why that is the case, and I won't go into those now, but basically there's an incentive in Zimbabwe to try and take advantage of their resources. And 2 years ago, they really pushed that market and started increasing in supply. And I'll show you some of that data in a second. So what drives the fundamentals of chromium? Based right back to that first graph, that is stainless steel. So the stainless steel industry defines how much chromium we need for all intents and purposes. So the graph here on the top left, this is showing you stainless steel production in million tons. And sort of the original hubs from 2 decades ago, Europe, USA, and Japan, have really remained flat over the last 2 decades. And what the standout graph here is China. So you can see that gray bar in the middle really increasing in volume. And China now accounts for over 50% of stainless steel production. Indonesia, I mentioned already, the new kid on the block. That picture on the top right there, that is Tsingshan's plant in Indonesia, where it was built up over 2016, and they commissioned it in 2017 and ramped up stainless steel production. This is an integrated stainless steel plant where it is designed to consume chromium ores and then hot charge them directly into a stainless steel melt, essentially integrating the ferrochrome process into its production system. Hasn't been working quite as well as they hoped, and they are still importing quite a lot of ferrochrome. Though as the plants, or as they fix the issues regarding to that plant processing, I do expect to see them switching to a chromite feedstock rather than ferrochrome. Just quickly, the figure at the bottom now in terms of chromium demand, so the units across all industries. So this includes the chemicals industry, other steel applications, foundries, refractories. China accounts for over 50%, and that really reflects that stainless steel industry, well, and more so the ferrochrome industry, which we'll get onto in a sec. Okay, so the stainless steel industry has grown over the last 2 decades. Where has this growth been captured in terms of this raw material supply? So at the bottom left, we're looking at chromite production, and the standout figure here is South Africa. South Africa has really ramped up its production, and as of 2018, is producing more than 20 million tons of chromium concentrates. Most of this is feeding into China. So, or the other 2 countries that are really worth mentioning here are Kazakhstan and India. Not much growth in Kazakhstan. India, we saw some early growth in the mid 2000s, where they were trying to capture some of the growing stainless steel markets, but they have an export tax on their chromite resource, and really it has become an integrated industry again. The way to see that, if we look on the graph on the right, this is the ferrochrome production over here. And if you focus again on green and orange, this is Kazakhstan and India. Sort of the scale of those 2 graphs reflect the scale of the chromite production. So this is really showing us these are integrated industries where most of what's being mined is being consumed in the ferrochrome industry. This is not the case in South Africa. You can see chromite supply is not reflected in the ferrochrome industry. If we go back 2 decades, South Africa was by far the leading ferrochrome producer. But that nice yellow bar on the top is China, and what China has done while it was developing its stainless steel industry, it has also developed its ferrochrome capacity. And so China has really integrated itself, excuse me, I didn't mean to go forward, into the supply chain down to ferrochrome. However, China is reliant on third-party feedstocks as it does not have the significant resources to support its ferrochrome industry. So where does this come from? So China has effectively turned to South Africa for the supply of chromite. South Africa now accounts for about 70% of chromite supply to China. This is here in blue. This is just a normalized to 100%. You can see the nice increase over the last 2 decades. One of the main other sources was Turkey, sitting in over here, which increased to about 2 million tons over the late 2000s into early 2010, but really has lost that market and is expected to decline to less than 1 million tons this year. The reason for all of these changes is that the South African chromite, firstly, is a lower grade ore in terms of its chromium to iron ratio. But the stainless steel plants in China have really been geared towards consuming this ore for the stainless steel industry, and they're happy to use charged chrome, which is sort of the lower chromium content, high carbon ferrochrome. And because of that, because of the use of charged chrome, they're able to benefit from the lower cost. Specifically, we're going to talk a bit more about UG2 in a second, but one nice example is Mintal, one of the big ferrochrome producing companies in China. They were building one of these new ferrochrome plants, and the design was to blend 50% South African ore with 50% high-grade Turkish ore. However, on commissioning of that plant, they chose to utilize 100% UG2, taking advantage of the costs. And so what I'm showing here at the bottom right is just sort of an average cost of South African and Zimbabwean chrome ores production. And you can see sort of the relative scale of benefiting from using UG2. And I'll talk a bit more about this in a second. Now, Turkish ores sit somewhere in between here. Some of them are cheaper to produce than South African primary ores, but in terms of the volume scale, they are not able to accommodate that supply. We think about the resources of the bushveld, which we in South Africa love talking about, really is a key resource and why South Africa has its role in this industry. And just quickly highlighting here, Zimbabwe at the moment is not only that it has the resources, but in terms of the infrastructure and the cost competitiveness, it's not there yet based on the scale. I haven't mentioned this top graph here, so just to touch on that, this is looking at sort of the exports from a South African perspective on a normalized scale where 2004 is 100. So you can see chromite exports really ramping up, and that's really representing this Chinese demand. The same is also true for manganese ore. And at the bottom, I'm showing you ferrochrome and ferromanganese. So it's really the ferroalloy industry in South Africa that has lost some of this market potential to China. Okay, I mentioned I was going to talk about UG2 a little bit more. This is really one of the key topics at the moment that is defining a lot of the trends and a lot of the market dynamics of the industry. So the UG2 is really related to platinum group metals. It is a reef in the Bushveld igneous complex that is mined together or as part of sort of the Merensky package or at different levels, but for its PGM content. Now the UG2 comes out with significant amounts of chromite. However, because of the extraction of the PGMs, we are dealing with quite a fine-grained tailings. And so it's the recoverability of chromite from these fines that has really been something that has lagged the industry in terms of supply, but over the last 2 decades has really ramped up. So what the figure at the bottom left is showing you is technically recoverable chromites from UG2 tailings. So we're talking the technical recoverability of these fines, which is somewhere in the mid to low teens in terms of percentage recovery of chromite that's in the tailings. So the two bars added together, the dark blue and the light blue, that is the total volume of technically recoverable chromite in the tailings based on PGM minings. And so you can see that peaked in about 2007 and has remained relatively flat. 2014, that's showing you the Marikana strike in the platinum group industry. So showing the relationship of the availability of chromite is directly linked to the platinum group metals industry. And the reason this has been flat, and just borrowed some images here from Kitco, just looking at the 5-year platinum price. It's really not been a growth market over the last decade, really. And that is because its main application in catalysts has switched to using palladium-rich catalysts in auto catalysts. That's shown quite nicely here on the graph, the second graph by Kitco with the increase in palladium prices. Now, the South African bushveld is really more geared towards platinum-rich deposits. So there is a limitation in terms of how much the industry can benefit from these sort of basket prices for the palladium industry. But earlier this year at Indaba, just before we were all locked down together, the industry was quite bullish in terms of what the potentials are for benefiting from access to this changing basket price. Not only was palladium doing very well, but rhodium was seeing unheard of prices. So the industry was talking about how to capture that. There is a limit to it because it is still a platinum-rich deposit. So that does add a limitation to its total basket because that supplies the majority of its revenue. Now, bringing this whole thing back to chromite. So chromite really saved a lot of the platinum group producers over the early 2010s when we started to see a much higher recoverability or processing for chromite out of the UG2. And as of last year, nearly 80% of PGM tailings was processed for chromite and recovered. So we had about 6 million tons of UG2 chromite come out last year, up by about 1 million tons nearly. And earlier this year, the expectation was to see another 1 million tons come online because there was a bullish sentiment for platinum group elements, not platinum itself, and as a result, also still benefiting from the chromium side. Now, I mentioned that the UG2 chromite is a lower cost production for chromium that comes out of the ground, and it does impact the industry. So at the bottom right, what I'm showing you here is just the price graph for LG and MG ores. These are your primary chromite deposits that are targeted for chromium production. Turkish ores just added in for fun, and UG2 ores sitting in there. And so that solid red line, that is the cost of production of about 90th percentile for primary, for LG, MG ores. Typically sitting in the range of $180 to $190 a ton, excluding our recent exchange rate processes. So we're talking now 2019 averages. And when you look at in early 2017, where the price is coming from its high right back down, it sort of tends to come back down to that 90th percentile and oscillate around that. And on the long-term trend, that 90th percentile is sort of the long-term price trend that we then also use to forecast prices. So if we're now below it, on the long-term trend, we do expect this industry to be cost-driven because it is a bulk market. There's a lot of material moving. But what's been interesting over the last 2 years is that there's been a lot of supply coming online. So I'm just checking if I've got a chat here. Oh, sorry, there's some questions. Still learning how Zoom works. I'll get to those. Let me just put this over here so I can see it. There we go. The high prices really drove extra supply coming onto the market over 2018 or 2017 and 2018, and this supply has really sustained. And so we saw a surplus market develop and become sort of a structural surplus now for 2 years. So as of the mid-2018s, you can see the price is really not going much higher than that 90th percentile cost of production because there's so much material online. And then over the 2020s, you see it really drop below that. And moving towards sort of this UG2 cost of production. We can argue about where that UG2 cost sits, but in this case, we look at it from in terms of the revenue-based PGM cost of production, which I think is probably a reasonable approach, although one can argue much cheaper processing costs for certain tailings. And so it is this additional supply of UG2 that is being consumed on the Chinese market where there is the majority of the demand. And what's to be added in 2019 saw a slight slowing of demand for stainless steel. And that has really underpinned what has happened over the last 6 to 18 months. There's a lot of material on the market, slightly slowing demand, a lot of inventories on the stainless steel side as well as the chromite side. So the ferrochrome industry in the middle is really being encapsulated by a surplus market. And that has really defined the current weak market for chromium and why it's causing several headaches for producers across the supply chain. So this is quickly just illustrating the importance of UG2 in the industry, and sort of right now the limit. This is the big question. It's like, what is the limit of the UG2 supply? How far can it go? So right now, based on the numbers that we're seeing here on how much UG2 is available, we're talking at about 8 to 9 million tons, or maybe closer to 8 million tons of on an annual basis recoverable chromite. So it is very dependent on the PGM industry. If that industry returns to its bullish nature of February 2020, which is now a while ago because a lot has happened, that number can increase significantly. Additionally, what has to be mentioned, technological improvements. So we have low teens recoverables. If that is improved, there's really an option for that to add significant volumes of chromite onto the market. And next slide, there we go. Right, so what has happened to the South African ferrochrome industry? The short answer is Eskom. The long answer is probably also Eskom. But basically, the way we've been thinking, well, let's turn this back a little bit. South Africa has benefited from access to cheap and abundant raw materials. The Bushveld Igneous Complex is our geological heritage, if you will, and has really defined South Africa's position on the industry. However, now we're thinking about, we also used to have the cheapest electricity for ferroalloy producing countries. But on top of changing electricity prices, we've had load shedding causing sort of headaches for producers in terms of access to, let's call it, sustainable electricity or energy supply. Now, China does not benefit from either of these. It does benefit, however, from support from the downstream stainless steel industry. So the integration into stainless steel is quite important in here. But if we look at the electricity costs on the bottom right, so this is just looking average China and sort of average South African consumption in ferrochrome, you can see that South Africa really has lost its competitive advantage, and as of 2017 has got a higher cost electricity price. Now, China is also averaged between north and south, and there's a distinct difference between southern prices being higher than northern prices. So the northern industry in China, northern ferrochrome industry, is benefiting from relatively cheaper electricity compared to South Africa at the moment. And it is also benefiting from access to cheaper ores, which it is getting from South Africa. So, because the new plants are specifically also designed to focus on UG2. So on the left here, this is just the ferrochrome cost curve from 2017. Because there's been quite a lot of changes lately in terms of the cost structure, the amount of UG2 on the markets, the depreciation, which will have a large impact. So we're busy trying to really understand the nuances of our current cost curve in terms of where do certain mines sit here and what is the actual costs in China for different plants. Back in 2017, we sort of had an average cost curve. So these larger blocks here on the right, these are the average costs in China. Predominantly using LGMG, but at this point already UG mixed in there, but that percentage will have increased. So the cost of production in China is decreasing. So the reason I put up the 2017 curve here is because back here, South Africa, which is the majority of the plants are sitting down here mixed in with the rest of the world. This is going to start to shift right now over these last couple of years. And South African, Chinese ferrochrome capacity is really going to become competitive over the market. Yeah, so this is something that's very keen to follow. And we heard earlier this year, before COVID-19 came into play, that both Samancor and Glencore, our major ferrochrome producers, were looking to start to shut down several plants because the cost competitiveness was not there and the prices were very low. And quoted in each of those articles, Eskom has been an ongoing issue for those plants. So we've spent a lot of time at Ruske looking at the impacts of COVID-19, so the coronavirus outbreak. I just wanted to show you a couple of sort of the forecasts that we're starting to put together on the market to try and see how this is actually impacting it. We started off with a V-shaped recovery, which was kind of starting to model the SARS pandemic from, well, when it was the early 2000s. But that quickly changed to not being the case, as we saw a much broader case impact on a global level. So we're showing you here in green, the green line, this is sort of our pre-COVID forecast. The industry for stainless, or this is the GDP, had really slowed to around 2 to 3%. But expected to ramp up over the next few years. So COVID-19, based on our sort of deep V analysis, we're looking at about a 1% decline in the global GDP, but then a prolonged recession, so these are sort of the two scenarios that we're looking at, is going to really increase that. And a prolonged recession really depends on the extent of the lockdowns that are happening in different countries. A second wave of COVID-19, you can go through the scenarios by yourself in terms of what could intensify the situation. Nevertheless, looking at pandemics and financial crises, we are expecting to see a recovery in 2021, and then the market return to some sort of a long-term annual growth rate that falls within the scale that it was. In terms of chromium demand and stainless steel, so the graph at the bottom here is showing you. The orange graph would be, well, this is actual here, but prolonged COVID-19 as the prolonged recession forecast. And so that's the impact of here is lost down to, oh, excuse me, in the wrong sense, just above 80% of demand in 2020. Our base case forecast includes the orange plus the blue, which is where we think we're sitting at the moment. So the green has been lost from our pre-COVID-19. So this is the impact that we're thinking is going to happen to the stainless steel industry and chromium demand. So we're losing over 10% of demand in this year. So we are going to see a sharp decline in rest of world demand specifically. So there is a sort of a regional difference here. So China, we saw stainless steel plants switch off in February, but really come back on in March and swinging back into action. Similarly, the ferrochrome industry, we look at Chinese supply, dropped off a little bit in February, or significantly little bit, but not as much as we would have expected. It was still operating at pretty high utilization rates. But as of March and April, it really has returned back to where it was in January, given its relatively weak market. So it has actually back up and running to where it was. So the question then was, will the lockdowns impact supply to China? a lot of the conversation in the chromite industry is about the port stocks in China. These really reflect South African supply into China and the amount of material that's available to market there. Typically, we're talking about 3 million tons that sits in stocks, and now during COVID-19, this has ramped up to 4 million tons. You know, this is not really, I mean, it's not really surprising. But we have to remember is like how important is this 4 million tons? The market in China consumes about 1 to 1.3 million tons of chromite a month. So it is used as a negotiation tool, but the sort of, if you want to think longer term, it really doesn't have that much of a stockpile in there. So short-term volatility in supply will impact the longer-term access to raw materials in China, depending on how long they can make these stocks last. So I've made a last point at the bottom here. Sort of 2 years of surplus supply was already starting to force changes in the market. The prices were weak, the markets were weak. There was a lot of material, so people were starting to switch off different mines, and this was happening before COVID-19. One example being Turkey, where we already expected to see supply drop to below 1 million tons this year, because they were operating majority in an unprofitable level. Similarly, in South Africa, there was going to be some reaction to the prices in terms of supply, and because of COVID-19, which is going to sort of emphasize the demand and drop that even further, we're expecting to see an acceleration in sort of a downturn in supply from South Africa, but then a recovery in it. The raw materials are definitely here to supply the markets. So, how will the markets evolve over the 2020s? The image on the top right, the largest ferrochrome producing companies. On the left there, we've got Glencore and Samancor, followed by ERG in Kazakhstan, and then our two top Chinese producers. So because of the guidances given by the South African producers, we are expecting to see Kazakhstan or ERG become the leading ferrochrome producer this year. So what's showing here is total capacity, and those dashed blue lines is sort of potentially dormant ferrochrome capacity in South Africa, or unused depending on utilization rates in here. Similarly, in China, there is potentially dormant capacity, but that is related to furnace technology. And the graph on the bottom, this is something we've been working on putting together, is identifying the furnace sizes of all of the different furnaces in China, because the regulation states for any new furnaces coming online to meet their environmental standards has to be above 30 megavolt amperes. And you can see there in northern China, so that's what says North China, South China, really the investment in these large furnaces has been in northern China. And so part of this green bar down here, this is potentially furnaces that will shut down over the next few to 10 years as environmental regulations and pollution control become quite important, which is a trend we've seen quite specific in China over the last 2 years. So despite there being a reduction in output from several of producers outside of China, there is plenty of capacity in China to deal with this. There's more than 10 million tons of ferrochrome capacity in there, with their output sitting around about 6 million tons last year. So there is more than enough capacity to deal with demand, should, for example, South Africa decline in output. And South Africa will see quite a drop in output this year in response to the ferrochrome industry being quite weak and some of these furnaces switching off at this time. The question then remains, can South Africa recover? Can it regain some of that market share? And I think the key point to emphasize is the market outside of China has very limited growth. If you remember that graph I showed in the beginning with the stainless steel, sort of Europe, USA, Japan, it's very got limited growth. The growth really is in China and or Indonesia. Now Indonesia, where South Africa is supplying ferrochrome to, is actually looking at integrated plants. So it is trying to focus on chromite. It's not happening at the moment. But again, so that long-term trend is not necessarily supportive of the ferrochrome industry here. Then another topic to think about is Malaysia. Malaysia, we've already seen sort of ferromanganese plants from South Africa relocate over there. And so they've developed ferroalloy industrial parks, and it's a possibility that Malaysia may look to do the same with ferrochrome. So in our new report, we've tried to put together an estimated cost of production for Malaysia to build this into the narrative. So these are sort of the narratives that we need to consider how the ferrochrome industry is going to evolve, and what are the competitive advantages of the different regions in terms of supplying ferrochrome in here. So again, China has the capacity. It is one of the places where most of the investment in ferrochrome industry has taken place. Yeah. And so on the chromite side, the question then is, can other supply sources compete with South African chromite? On a volume case, no. The question then remains, how much material can come from other places? I mentioned Middle East has got some growing supply. There is a lot of chromite, or there's chromite found on every continent. But on the cost side, South Africa definitely sits on the lower end of the cost of production. And so the real question here in terms of sort of the long-term sustainability of the industry is related to how the UG2 chromite market develops, which is effectively feeding into China. So in a way, you could argue that South Africa is kind of competing with itself here on a chromite versus ferrochrome basis. And the question then for the South African industry is like, is there any appetite for investments in South African ferrochrome markets? So, without having said much about what's going to happen over the 2020s, these are some of the thoughts and the narratives of the industry that are going to define what's happening in the 2020s. So I wanted to leave you with that, and I think that gives us that. So thank you very much. Over to you, Isabel.
Thank you very much, Nils. I think that was very interesting and nice overview of all the complicated factors that play into the market. So we normally give a few minutes for questions, and I see there's already 2 questions. So we can also obviously come up with a few additional questions. In terms of the discussion, perhaps in terms of especially UG2, there's been a lot of talk from the Department of DMRE, Department of Minerals and Resources and Energy, about the tax, export taxes, very much like India. How is Ruske viewing that?
The export tax, the first thing to remember here, the export tax has been a discussion for decades, probably. So that needs to be taken into account. And the next point here is that the export tax effectively impacts China. And if we look at where the chromite volumes are moving, it is moving to China. In expectation of this question, I have another little slide. You know, talk about an export tax is that really, what is the implication of that? And I think looking at Indonesia is quite interesting because they did something similar with nickel. But it's not similar in many other ways, because what you see here on the graph on the left, this is sort of nickel ore exports, low-grade nickel or exports. And in 2014, they imposed an export ban in order to incentivize investments in the country. And then you saw ferronickel exports, so this is the nickel pig iron industry, which also feeds straight back into that stainless steel industry. And this is why that photo, again, at the top right here, is showing you that Tsingshan plant, why it is developed there, is because of the access to the nickel ore. When it comes to the cost of stainless steel, at least austenitic stainless steel, it's really about the nickel, less so the chromium. So you can see that they invested in both ferronickel as well as stainless steel industry. Excuse me, the orange line here showing stainless steel production, and this is the commissioning of that stainless steel plant. But then they also relaxed the ban on ore exports, and ore exports increased back up because the Chinese ferronickel plants required this material. Now what's happened in Q1 2020, they've reimposed that export ban, and so we'll see over the course of this year how that evolves. The graph on the right, these are actually exports from South Africa to Tsingshan, and as of 2020 also Geelong, which is the second stainless steel plant that's developed here. So this is sort of a theoretical approach, well, it's not a theoretical approach, it's a practical approach to how export bans could potentially incentivize investments. Now it's important to note here that Tsingshan is a Chinese company, so the investment is by the Chinese in this industry to circumvent this issue. The Chinese have looked for several decades to invest in South Africa in stainless steel or ferrochrome industries, but in 2007, 2008, with regards to sustainability of electricity supply, they decided no, and they really invested in their domestic ferrochrome industry. So what the impacts are of it, or the potential of it, are difficult to really outline. Because the main trading partner is China here. And it becomes more of a political question then, in terms of what are the impacts of imposing a tax. By imposing a tax, how much material could be lost? And this is really, maybe if I just go back a few slides, here we go. You know, this really is your competitive landscape for chromite to China. This can develop with time, obviously, but there are some, I called them here, potential supply growth countries, again, with this question in mind. So there are regions where the supply can grow, but if you think about the resources and the reserves, you can't replace all of South African chromite. So the export tax, you know, yes, it'll impact costs, but over the long term, it really depends on the sustainability of the industry here, rather than the export tax on chromite, I think.
So it's a little bit, I've been thinking a lot about it, because you know, the question is often asked of us to think about and make recommendations, but it's a little bit like charging toll fees on the only road that exists and not investing the toll fees in building other roads. So unless you build capacity or support the smelting capacity in Africa, the tax will in the long run not really benefit the country. If I translate very roughly what I think you said.
Yeah, I mean, it's like, without saying too much in terms of what, you know, have an exact forecast of where I think this is going to go and the impact. I think the reality of it first taking place needs to be taken into account. So in my forecast, I'm not assuming that the South African export tax is going to be put in place, because how it will really impact the industry remains hard to, as you say, this one road export. So South Africa will remain part of the supply chain. It might lose some market share, and it probably will if you increase the prices. You will see Turkey come back online to whatever extent it can, but it does require a market to demand to be growing, which it is. The stainless steel forecasts are relatively good. Chinese crude steel is expected to peak over the early 2020s, but stainless steel will always outperform that, because it is a more speciality alloy, if you will, in terms of its applications. So the growth markets is there, and it really just depends at what price levels we come in here. So you will impact the market share of supply. But the key question here again is, there is currently quite a weak market, which is underpinned by a lot of UG2 on the market. So within South Africa, there is a balance that is impacting its own supply. You actually had primary mine supply in South Africa decline last year, despite there being a net increase in supply from South Africa. And that's likely to happen again. Well, if you take COVID out of the picture, that would have happened again likely this year as well, if another 1 million tons of UG2 was to come online. There wasn't the requirement for that material, so that would have displaced primary chromite. Now with COVID-19, we will see an impact on supply, and I think South African supply will probably drop back below 20 million tons this year. But the ability for it to ramp up is there, and you know, there's current estimated capacity. We're talking closer to 30 million tons, if not more, just in South Africa. So there's a lot of material available. There's a lot of mines that are there waiting to be used.
Yeah. So there's a question that's always interesting to think about in terms of grade, you know, 44% versus 42%. Is there any shift in the market towards accepting the lower grades, especially I think in China, they're more keen to take the lower grade stuff? And what is the impact, you think? It all ties back to you too, I know.
Yeah, look, I think that impact's already happened in terms of the stainless steel industry is geared to accept charged chrome and low-grade charged chrome, which is, so that I don't think that's an issue much longer that really requires detailed analysis. Like the new plants, the technology is there to utilize UG2 chromites into charged chrome and into stainless steel. That's really not the issue anymore.
So does it, sorry to interrupt, but does it mean perhaps that the potential to go even lower? Because if you go lower grade, say 38%, your recovery from the tailings goes up.
Yeah. So, yeah, I mean, this is where you probably need a metallurgist to really come into play here. As much as I love being a structural geology, I fall short in certain aspects.
I can help you there. Yes, 38% is probably the new 42, I think, where things are going.
Okay.
But I think the problem that we have with is that the market is so unusual. Apart from the COVID-19 situation, it was already under pressure before we started, so now it's very complicated. Has there been any, I mean, there's some questions here, and I know you have an interest in batteries. Any potential for iron chromium redox flow batteries for South African ferrochrome producers to level cost of electricity?
I mean, yeah, pick a commodity. Everyone's looking at batteries at the moment. I think the flow batteries is really a vanadium story at the moment. They're the ones who have an established industry and are looking to capture that growth. And the growth is not that huge in comparison to electric vehicles. It will be large enough, but between lithium ion batteries and vanadium redox batteries, I think the market is capable of being covered. So any new technologies, we're probably talking the R&D ramp up, which that's usually what, 5-10 years. So I wouldn't say this decade. Doesn't mean it's not going to happen. This is really an R&D question in terms of where people are looking at how these batteries can operate. But if you're looking at flow batteries right now, vanadium is really the market growth there. It's suffered its own issues. There was quite a lot of price volatility in vanadium in 2018, which took vanadium flow batteries off of the economic scale. But now you're seeing people trying to integrate across the supply chain to get rid of that volatility. But I mean, I think where chromium has its its access to EVs at the moment is thanks to Tesla with the Cybertruck, which is a stainless steel truck, or a bucky if you call it. I don't know why they call it a truck. I would have hoped Elon Musk would have just called it a bucky. But anyways, yeah. So I think that's chromium's exposure to new energy markets is the Cybertruck for this decade. I don't think it's going to get more than that.
So another question, perhaps a little philosophical, but a lot of the Chinese furnaces, like you said, is being closed in terms of their environmental. So it's probably the old, smaller open furnaces that are getting closed down. And relative to that, relative to China, South Africa's furnaces are actually quite modern in a sense, although we suffer from the electricity comment. But there's the age and size of our furnaces are actually quite competitive relative to China.
Yeah.
Or do you think differently?
Yes, if you sort of plot the percentage furnaces sizes, but that's changing very quickly. If you look at these two over here in orange, these are Xinjiang and Mintal. You know, the new plants that are being built are competitive, and China has this whole process in terms of they can only build new plants if they close down the equivalent capacity of plants that don't meet the environmental regulations. That's more specific to the steel industry, but I think the ferroalloy industry has very much the same regulation basis, control on that because of the whole pollution story.
So,
and you can see a lot of big plants coming up, and these will replace more of those green bars at the bottom there in terms of those smaller plants.
So we're losing our competitive advantage in terms of scale, capacity, and technology as well, on top of our electricity woes.
Yeah, I mean these aren't makeshift ferrochrome plants anymore. These are well-designed plants.
Yeah, it's not like it all, not in the beginning. So in terms of any scenarios in terms of Eskom, has Ruske done any scenario evaluations in terms of the electricity impact on the South African case?
Well, scenarios, yes. I think the one to talk about is a base case scenario, and it's basically over the next 3 to 4 years, which is what Eskom needs to revitalize, restore, repair its industry. South Africa is going to continue to lose market share in ferrochrome industry. I don't think we will go back above 2 million tons for the next few years. And then we will have to see what the market looks like in terms of who has captured South African market share? It's likely to be China. I mean, you hear stories about the Russians trying to take advantage of South Africa. There was an article out, but I mean, they've got 200,000 ton capacity, so they can only do so much. Kazakhstan, you know, they're ramping up capacity, and they have a higher grade product, so they look to access different markets as well. So it's really, again, it kind of comes back to China in terms of its competitive landscape, because the rest of the plants, yes, there's potential upside, but on the scale of complete scale of it, it's not large enough. So it really is China that we have to focus on to understand where that market share comes from.
Yeah. So in the picture of Eskom, say, assuming we will have another 3 years of, you know, unreliable energy supply, or at least unpredictable, it's not so much the cost, because we have very low cost UG2 ores available. So it's a very, very complicated picture. If we don't step up now, we will completely lose that capacity permanently.
Yeah, but I mean, for South Africa to benefit from the UG2, there is, I mean, for all of the capacity to benefit from it, it does require investment rather than just using UG2.
Yeah.
So it's not that simple of saying we've got the resources. We actually require investment in the industry to scale that production. And I think that's, you know, my point at the bottom of this slide is, you know, is there appetite for that investment?
Yeah, there are.
Yeah.
Yeah, people need to invest. If somebody wants to invest, they need to see the benefit for them. That's the problem. So overall, I mean, I know I sometimes, you know, when you review papers, there's still papers from other places in the world that says, yeah, South Africa is the largest ferrochrome producer in the world, and it's not true since 2012. So this is a little bit depressing if you like ferrochrome, like I do. But there's still potential. Do you think that what does South Africa need to do? Is it just investing in ferrochrome production, or what else can we do to change this picture, to turn around this runaway train?
So I'm not going to comment on sort of the emotional side as a South African here, as much as I have the ability to do so. But the point here is, if you look at the industry as such, China will account for over 50% of supply this year, because of the impacts of COVID-19. And the fundamentals of the industry are built around that China will continue to gain that market share. How South Africa benefits from it, I mean, the resources are here. South Africa will be part of the supply chain from a chromite perspective. It has the resources to supply it, and we've seen South Africa take advantage of having those resources through its partnership with China, if you will. So yes, from the ferrochrome perspective, there are externalities that are in the way of having South African ferrochrome industry sort of recover, if you will. The industry is there. It was, you know, how that industry operates depends on government and the producers in terms of what's required. But the forecast in terms of its cost competitive market scale is declining. So in order for it to become competitive, or in order for it to grow, it requires to become competitive again. And that includes access to electricity, unfortunately. So from the markets analysis perspective, that's a difficult stance for South Africa to be in right now.
Yeah. Well, I think, Nils, we all understand that the market is complicated and that China will continue to dominate. But, you know, we have two products, ferrochrome and chromite, and we can leverage both. Maybe the ferrochrome market will remain in South Africa, production capacity will remain under pressure for the foreseeable future, but we still have the resource. I saw somewhere that if South Africa stopped producing completely, no chromite at all, the rest of the world has about 100 years of chromite supply.
That was my tweet.
Was it yours? Yeah. So I thought that was quite a nice, was it a tweet? I thought so. I really enjoyed that. I thought it was, perhaps that's a very nice closing statement. You can summarize the tweet a little bit better than I did.
Yeah, look, I think the reality is that South African chromite is going to be part of the industry, because thanks to the bushveld, you know, we have access to this raw material. The ferrochrome industry, we can sit here and argue about how it could potentially unfold. The reality is it's not looking good, and it's an uphill battle, and it will be for the next few years until Eskom figures out whatever the results may be. So yeah, if South Africa switches off its borders because it takes lockdown to the next level, level 8, you never know, then Chinese industry will need to look for raw materials, that's for sure. There are mines available. If South Africa switched off, you know, there's Australia, I mean, even Indonesia, these nickel laterites, they've got some chromites. People will become innovative, as scientists do when something's stripped from their repertoire. But yeah, look, based on the reality, South Africa has the supply, and this chromite will remain part of the supply chain for the foreseeable future.
Yeah. Well, I think just again, thank you so much for your time. We're looking forward to hear from you again.
Cheers.
I think I twisted your arm to give us another presentation in a month. But thank you so much for your time, Nils. I really enjoyed it. It's always thought-provoking to look at the big picture. I mean, we sometimes just, you know, we see our own problems and we don't understand how small a player we actually are relative to China at the moment. It's good to understand that.
No, I appreciate it. Thank you very much for having me here. It's been an absolute pleasure.
Yeah, thank you so much for everything, and goodbye, everybody. I hope you enjoyed our presentation today.